Welcome to Markets Now. I'm Michelle Rook along with Arlan Suderman with StoneX. And Arlan, we had mixed closes in both grain and livestock futures trade here today. Let's talk a little bit about the wheat market first. It was kind of the leader over in the grains. Was that war premium being put in or weather premium, especially with this cold event that we're looking at?
Yes, all the above.
Okay.
When you have risks over in Ukraine and the Black Sea that are increasing, which they are, then we start focusing more on weather here in the United States, which with the cold coming in and with the drought worsening in the central and southern plains, crops deteriorating significantly each week that goes by, that becomes a bigger factor. So far, it's a lot of short covering with the momentum trading algos kind of adding to it. We'll have to watch and see if we really start turning these charts in the week ahead, then maybe we'll have some momentum to really build on.
Yeah, what are you watching on the charts here to get some of those funds to get out of those positions and maybe push long in Chicago? I know maybe they've turned a little bit longer over in at least Kansas City wheat.
Yeah, we need to start taking out some of those previous month's highs and some of the trading that we don't are breaking through those trends, building some new trends in there. And that's what the algos are going to be watching for in the fund managers. We've got massive short positions in the Chicago wheat. If those start to try to get out the door, that could give us a larger rally. But right now, it's really Kansas City and Minneapolis kind of leading it.
Yeah, and some of that, again, is on whether we haven't talked about Minneapolis wheat, concerns there that the spring wheat crop is not going to get planted.
Yeah, I think we're going to get the snow melted, but then it's the forecasts have remained fairly wet, and it's will this wet pattern ease up and allow the ground to dry out? And I think that's going to be the real concern. We're cautiously optimistic that we will get it done, but each week that goes by, we'll get a little bit more nervous.
And the corn market, we did see the bull spreads working here today. Old crop stocks are tight, and then you get China business on top of that. How much further do you think we can push old crop prices?
Well, we had an impressive day on Friday to close out the week. So that was encouraging from the corn standpoint, and that helps wheat as well. Those two are going to be intertwined a little bit more now going forward. I think our best chance is here in the near term because once we get the new crop planted and we get it going and it looks good with El Nino coming on, the trade's going to shift its focus more and more on the new crop. So if old crop's going to make a run on the board, it's going to have to do it here in the weeks ahead. Otherwise, it's going to be more of a basis play as we get into the summer. But right now, China buying is really helping. The funds really focus on exports, even though that's just a small fraction of overall demand.
So do you see more China business or more export business coming at the market? We still have a big road to hold here trying to catch up. We're still, what, 32, 33% behind normal, or last year anyways?
Yeah, we need to close the gap on about 180 million bushels of corn, and I think we can do that. And it's not just China, but it's a short crop in Argentina and Ukraine, less and less of a factor. It's going to help us do that. I think the trade's overlooking the short crop in Argentina right now because that should directly help our exports here in the last half of the marketing year and help us have a much stronger last half than we did first half.
Okay. And then when the Brazilian safrinha corn crop comes in, is that going to cut off all of our exports? Because right now we're pretty darn competitive from a global standpoint, aren't we?
We are, but once that safrinha crop becomes available, and that's really going to be primarily July, August into September, that we'll be competing with that. Right now, the safrinha crop looks very good in Brazil. And so far, what Brazil needs is a rainy season to go about 3, maybe 4 weeks longer than normal. Right now, the forecasts are suggesting they're going to get at least another 2 to 3 weeks beyond normal. They really don't see an end to the rainy season now in the forecast. That means probably a big crop unless they get a freeze.
And speaking of Brazil, that record soybean crop is actually starting to weigh on our crop here, or at least our prices in the U.S., right?
It really is. We're seeing basis really collapse in Brazil. That's just how big the crop is, and farmers are selling. They don't have enough storage for all of it. And so they sell off the Chicago market. And when they see the Chicago market fail at major resistance points, they're going to add to their sales. Now, their currency has been strengthening as well, and that works against them. So they have to make a decision. Is the currency going to continue to strengthen against them and sell ahead of time while they can still get a decent price? Or do they hope that the currency weakens again so they can get more BRLs for the dollars that they get for their grain? So they got a decision to make. But overall, that's not bullish when you look at the several billion bushels they have to sell yet.
Yeah, and even we heard today that we have some Brazilian beans that are being imported into the southeastern part of the U.S. Just a cargo, but is that a trend that you see following up?
Yeah, we're hearing about 4 cargoes already. That's not really that significant from a total volume standpoint, but psychologically, it really tends to affect the sentiment of the funds when that starts to happen.
Right. And you mentioned that resistance that we hit obviously kind of stopped the soybean market. Can we recover from that, do you think?
We can, but it's going to be difficult with all the Brazilian selling. And farmers here need to realize that we've got a big crop that's just like trying to rally the market here in October, November, when we're harvesting a big crop here and selling it. Now that crop is in South America being harvested and being sold against our market.
Yeah. Okay, cattle had a big week. We scored some record highs on the futures and in the cash trade once again. And then we saw, some profit taking and hedge pressure today. And is that healthy, you think, at this point?
Yeah, it almost looked like a blow off top on Wednesday and Thursday, and then a little bit of consolidation on Friday. It was positive that we didn't gap lower on Friday to close out the week. That would have left a bearish island reversal. When you look at the fundamentals, they're still solid. Let's keep in mind, here's the job of the market. The job of the market, knowing that we're probably going to be looking at beef production by the end of the year down 10% year on year. So we have to ration demand. We started with the exports already. We have ample supplies of pork and poultry. So it's a matter of at what point will the consumer move down the value chain? Once that happens, then it's going to be tougher to sustain a rally on the board.
And as far as the futures, we can't fall too far here. We're under the cash already.
We are, but once we start rationing demand, then the legs will come out from under the cash as well. We just don't know at what level the consumer is going to make that change. Is it going to be well above where we're at now, or with consumer sentiment struggling right now because of the economy, will it be sooner?
Yeah, we had choice boxes above the 300 level, so we'll see if we can continue to sustain this or whether there will be some sticker shock at some point. Okay, hogs have been a dog. And today, did we just see some short covering? Was that unwinding of these darn cattle hog spreads, or what was it?
A lot of it now is the anticipation that we're going to see that consumer demand shift. So some spread unwinding there. We still have adequate supplies. What we've needed is a retailer to pull prices down that will clear those supplies. And that's part of the shift of encouraging the shift of the consumer from beef to pork taking place. And it's going to be a slow process, but we're starting to see it.
Thanks for joining us, Arlan Suderman with StoneX, and that is Markets Now.